Buy Now Sell Now we have every Friday done BNSN Pathshala. This is where you can learn a little bit more about how to look at charts, and Kunal is joining in. Kunal, good morning to you. And you've selected the history of the candlestick, and this dates back significantly longer than even the first charts were made on a screen. What can you tell us about the origins of the candlestick?
Absolutely, Alex. Thank you so much for that. I think it's a very interesting topic, going back to the grassroots of where the birth of technical analysis actually happened. So this is a very interesting kind of a discussion and arena for many market participants. Now, what we look out for is very snippets of how technical analysis actually started off. The grassroots of technical analysis starts off from the city of Osaka, which was actually the capital of Japan, earlier capital of Japan. Now, it had a lot of positives in terms of the location, the dynamics, and the demographics of this particular city. It was also called the kitchen of Japan, where there was a lot of sea transport, which used to be one of the best mediums of transport at that point of time. Rice trading, because of this, became very famous, and the first exchange, which you'll see in the next slide, the Dojima Rice Exchange actually became the first futures exchange which was established in Osaka long back. This is almost in the 1600s. Now, over here, what was important was because there was a coin base which was not happening, and the money was transaction. The transaction was getting into the rice contracts or rice futures. So there used to be a coupon which used to be generated. So if someone wants to send a surplus amount of money, he can do it via transferring the quantity in terms of rice. And that was the first promissory note which was built almost 2.5 centuries back. And that became, and this is why Dojima Rice Exchange became the first futures exchange, for the globe. Now, what transpired was this was the place where the technical analysis actually started off. Now, one of the persons who actually started off. So as you can see, this is the Dojima Rice Exchange, and this was the most important part over here, the flag. So this was the point where the prices of the rice futures which were traded were written down, and this used to be transferred across the various cities in Japan. Now, one of the individuals who actually is considered to be the father of technical analysis or the god of technical analysis is Munehisa Honma. He was actually the one who actually started off understanding the price-based analysis. So what he used to do, he used to study the price patterns or the prices for the rice contracts which were traded. He used to make a note of it. For 15 years, he actually started making a note of it, and that's where he started to make a lot of money. What he realized that the prices actually moved in two important fashions. One was the emotional behavior of the players who were trading rice contracts, and the second was the weather conditions. So it was the external as well as the internal circumstances which actually affected the prices of rice over there. He started jotting down the prices on the form of candlestick pattern, and then what he did was he used this data to try and understand that there were repetitive patterns which were getting formed. And that's where the terminology started to develop. So as you can see, that there are a lot of interesting terminologies which were shaped up from this, the likes of doji, marubozu. These are all the Japanese terminologies which happened. One very important data point was in terms of history was that he had at one point almost a consecutive 100 winning trades at a point. So he made a lot of wealth. He was one of the richest merchants at that point of time, and that was where the birth of technical analysis actually started off and candlesticks started off. But it's very interesting because it's just in the last 40-45 years, I think in 1970s, 80s, is where this got a lot of prominence from the Western civilization, and that's where the US markets or the US traders, they started to make note of candlestick analysis, and they start to use more Western terms over here. So which is why Japanese candlestick analysis or the history of technical analysis dates back almost 2.5 centuries, but it's just that it got a lot of prominence just in the last 40-45 years.
Okay. So just to follow up to that, Kunal, now you mentioned that of course the origins of the candlestick are 250 years back. That has changed quite dramatically, and I think this is one of the fundamental aspects of technical analysis. In the modern case, what is the way in which you look at a candlestick, and why is it important?
So you would not believe this, Alex. It's a very interesting question, but the rules are exactly the same what it was 2.5 centuries back. So, for example, the rules, as I said, that you're looking at one of the patterns which was mentioned over here, doji. Doji, in terms of the Japanese terminology, means confusion. So, doji is generally formed when you look at the charts. Probably sometime over the next couple of Pathshalas, I'll probably mention the likes of doji, how it is formed and what is the exact implication. Doji means confusion from traders, where traders are not sure whether the market or the asset class is going into a bullish side or a bearish side. So it's a very tight tussle which goes on between bulls and bears, and that's where the prices tend to close on a very flattish kind of a note. So these are the interesting part of the candlestick patterns. They have a lot of prominence, and the base of the understanding dates back almost 2.5 centuries, and it's still very, very relevant on almost an exact note.
Fantastic. So we will address this, of course, in future Pathshalas, but thank you so much for telling us the history of technical analysis and indeed the Japanese candlestick.